this IPO has been, in the making for last 2 years because the opportunity what India offers today in this sector is immense. We have come to size and scale now, wherein we can grow our ambitions much bigger. This entire IPO proceeds of 2,800 crore rupees, out of which 1,200 crore rupees will go into the capex, about 880 crore rupees towards the debt repayment, and balance would be for general corporate purpose. So for fueling our further growth expansions.
And if you could just explain us the entire debt prepayment method, and currently what's the debt levels now, what's the net debt levels looking like?
So net debt levels as on 31st March was close to about 2,200 crore rupees, out of which we will be paying about 900 crore rupees from these IPO proceeds. We will have a general corporate purpose cash lying in the system, as well as there has been a cash generation for the first 6 months in the system. So post IPO, it looks like it would be net debt zero.
And what is the overall capex plans? And this is a very asset heavy business.
Yeah.
So what is the overall capex plans? How you have spread it out across going ahead, and what kind of current capacity utilizations the company is having?
So there are two parts to the question. So the first part, if I had to take out, what are the future capex plans? India is offering such an immense opportunity today. Very few players are there. Entry barriers are very high. You need really a good investment profile, good balance sheet to keep on investing into the assets. And thereafter, it will start yielding the results. So it is very difficult business to get into the assets just like that. And now we have come to size and scale wherein we can go slightly more aggressive on the capex investment plan. There are several opportunities coming up in India, especially the government of India has been going privatization on the port model. They are inviting private players to mechanize and modernize the port business. So we have been very aggressive. We have been very aggressive so far in these terminal businesses, and I think we will continue to remain aggressive on this particular front. The other growth expansion, other than the brownfield, what we are taking the IPO proceeds from, would be the acquisition side of it. There are still a couple of opportunities available within India wherein we can do some kind of acquisitions. And the fourth bucket, if I had to look at it, would be a brownfield, greenfield expansions. Greenfield expansions are a good opportunity within India, and as of now, we are considering 2 ports on the greenfield side.
For net debt to EBITDA guidance we can give, and what's the revenue growth looking like? So these 2 levers is something which the markets want. So what would be the guidance if you could give?
Our growth on the volume front for the last 20 years has been 22% CAGR. And I think this sector offers good enough opportunity to continue to grow at these levels. And our balance sheet is strong enough, robust enough to encash this opportunity today. In the last 4 years, we have grown by 40% CAGR, but then we have been doing heavy capexes on those last 4 years. Our vision would be to continue to grow because India is offering that kind of opportunity, and our revenue would be purely incidence of the capacity what we are building. Our revenue has been very robust. Our utilization has been almost 64% as on June 23, which is very high, and it can go from the existing assets from 64%, it can go up to 80-85%. Which we will be doing in another couple of years. And the new assets what we are building up, that will be adding capacities to existing volumes and revenue.
Well, yes, in your clientele, it's a very interesting concept of anchor clients as well as third-party clients. Now, if you could just give us the concentration risk which is involved, of course, to it, and what kind of synergies can be there if new third-party players come in?
I would say it's a different thing to look at it. Any port company, when they develop an asset, it's such a heavy capex that you need to have a very solid anchor customer. Without that, you can't do in capex. Any port company across, if you see, unless there is a solid business case, you just don't go for it. In our case, it happens to be JSW Group as a solid anchor customer to start with. This is one of the biggest strengths rather than a risk if I had to look at it. This group, JSW Steel or JSW Energy, has been ever growing. So this is a solid anchor customer which is a growth oriented and happens to be from our group. What better combination than that? On top of it, our focus from group cargo to third party cargo shifted in 2018-19. And since then, our majority of our investment has been on the third-party businesses, and we see a volume growth, which we were doing only 5-6% in 2018-19, a third-party business. It has grown to 37% in June 23, and that too on a 3 times increased volume. The kind of shift we had happened, we got into containers, we got into LPG, we got into molasses, we got into sugar, fertilizer, coal exports, everything, which are non-JSW. So, India is offering such opportunity. Our Our direction also shifted from 2018-19 onwards, and we got into this business as a separate vertical altogether.